Hello, everyone. I think we're ready to start with the first market update of the week. This is after Friday's payrolls. Of course, we'll take a quick look at what happened with markets. We did see some big moves after those employment numbers were released on Friday. Just as a reminder, if you were doing something far more interesting than waiting for unemployment numbers to come out, the market on Friday was expecting the US economy to have added 200,000 jobs ish in October. The number actually came in at 250,000, so much better than expected. And the reaction, we had quite a volatile reaction, but maybe predictable. We'll take a look at these markets in a bit more detail in a minute. But we saw stock markets sell off on Friday and the dollar rally, which is as you'd expect. The numbers showed the US economy arguably stronger than expected, and it's built expectations that the chances of a rate rise in the US in December have increased. Looking ahead to this week, I think probably the immediate focus is going to be the US elections tomorrow, the midterm elections. We'll see how markets take that. It's tempting to say, no real surprises, no real effect. But we all know over the last couple of years when voters have gone to the polls, we have seen some big surprises. So let's just wait and see. Then later this week on Thursday evening, we have the latest update from the US Central Bank, the Federal Reserve. No changes expected to interest rates this month. Everyone's expecting that to happen next month, but we could still see, I think, some volatility off the back of those numbers when they come out. So we'll see. We'll see what happens a little later on this week, so plenty to keep our eye on. I think that risk warning has been up long enough. I'll just put some information up there. So to get access to the platform I'm using, just open an account with Capital.com. You can open a real account or a demo account. You'll see all the charts and all the indicators, all that sort of stuff, all the markets that I cover. If you have any questions while I'm going through this, feel free to put something in the comments on YouTube. I'm keeping an eye on those in case anything comes up. Either while you're watching live or after you've watched the video. Any comments, I'll come and try and answer them after. Or, of course, just drop me an email. And my email address is david.jones@capital.com. But let's get started. Let me just bring the platform across so we can see this and just make it full screen. I thought we'd start off with stock markets, just really to look at the reaction that we had on Friday and see where it's left us this week. So this is the Dow. This is a Dow Jones that we're looking at. So the number on Friday, US clocks have gone back over the weekend. So we're now back on the normal 5-hour time difference between the UK and the US. But on Friday, it came out at 12:30 UK time. For some reason, YouTube has only just sent the reminder out now, so we might have a few people joining us late. But so it came out at 12:30 on Friday. So if you look at where the Dow was trading, it was around about here, 25,600 in pre-market trade. And as I said, those numbers much better than expected. So we went from 25.6 when the numbers came out, sold off for quite a few hours, and started forming a base between 5 and 6 o'clock. So it dropped, 500 points or so in the afternoon, in the UK afternoon, the Dow Jones, when those numbers came out, but recovered as the day went on a bit, and we are seeing it a bit firmer as well. It's up, it's trading just below 25,300 in pre-market trade. We'll take a look at the S&P in a minute, but I think what's interesting here, let's make this maybe an hourly chart. What's interesting for me is where the decline stopped on Friday after that sell-off. So it got as low as briefly below 25,100, the Dow, which ties up with the lows from the day before. So Thursday's lows pretty much in that area. And you can see if we go back to October the 31st lows, they're pretty much there as well. So that's a really obvious level to watch, I think, going into this afternoon. We've seen it's the same for the S&P. We'll take a look at that in a second. But 25,000, let's say 25,000 to 25,100 has been good support for the Dow as it has pushed higher last week. And even though it got clobbered in the payrolls on Friday, it didn't take out those lows. So for me, for my money, the positive sentiment, the recovery sentiment is still there in stock markets, assuming these previous lows hold from Wednesday and Thursday of last week. I think if we start losing 25,000, there's the risk that maybe we'll see that panic that we had throughout October coming back into markets. So I think going into this afternoon, that's the immediate level to watch. I'm not sure what the market will be like tomorrow with all the voting going on tomorrow. Maybe we'll have something of a quiet session. We'll do this all again on Wednesday lunchtime, of course, and Friday, and we'll see how markets have reacted. But 25,070-ish is the low. So let's say 25 to 25,100. Let's take a look at the S&P. The level on the S&P. So the S&P is the broader US stock market, arguably a better barometer for the US stock market. But on the S&P, again, clobbered Friday afternoon, but 2,700, which is, I think, 2,704 was the lows from Wednesday and Thursday. So briefly dipped below those, but 2,700 holds. And we did see something of a recovery into the close. So this week, for the S&P this afternoon, the immediate level to watch is 2,700. We're quite a way above that now, trading at 27.27. But if we see the market under pressure this afternoon, let's see how it reacts in this 2,700 area. And just one last US market. Let's take a look at, have I got it here saved? Yeah, the NASDAQ 100. So let's just bring that one up and see where we are. So again, hit hard on Friday. This one did slip below the lows. The lows were about 69.25, 6,900 holds. So really easy levels to think about this afternoon. 6,900 for the NASDAQ 100, 25,100-ish for the S&P, and 25,100 for the Dow, and 2,700 for the S&P. But for me, because these levels have held, I think the positive sentiment we've seen in stock markets for last week is still out there. Let's see what this afternoon brings. To bring it back to European markets, let's take a look at the DAX. So the DAX is the German index. I think this is our most popular traded market out of all of them. So if we just have a quick look where we're trading now. So there's the sell-off on Friday. The DAX holds around about 11,480, 11,500 is the big level for the DAX. Fairly quiet trading so far today, but assuming we're going to get a bit of volatility in the US, we'd expect things to pick up this afternoon. Let's just take something of a longer term view on the DAX. For me, this is a recovery that we're watching now. We had this, there we go, this downtrend in markets. Arguably the bigger trend is still down for the DAX, but we had this market under pressure, like all stock markets, throughout October. But the DAX, since the 26th of October, is still, for me, just about. Why doesn't it not want to draw that? Let's pick it off here. It doesn't like that, doesn't it? Let's pick that one up. No. Oh, okay. It's still in this recovery from these lows from down here. So for me, the DAX, the immediate level, 11,480 to 11,500. So even though markets got hit on Friday, still overall in recovery mode. And one last stock market. Let's do the FTSE. The FTSE, as I said before, the UK market is always a bit of an odd one because so many of the FTSE 100 constituents derive their earnings from overseas. We had until the last few days of last week a weaker pound, and a weaker pound traditionally hits the FTSE. But you can see with the FTSE again on Friday sells off, but these lows from earlier in the week, from Thursday, around about 7,080, held the market up. So stock markets, I think, still on a just about positive footing going into this week. So maybe we'll see those losses from Friday clawed back a bit as the week goes on. I think the other interesting market over the weekend, we're getting used to this a lot at the moment, where pound US dollar, clearly so much of this is driven politically at the moment. What's going on with Brexit? What isn't going on with Brexit? All of this sort of stuff. And over the weekend, there was some news in the papers, lots of rumor always in the weekend press, that maybe Brexit negotiations are further along than was first thought. So the pound US dollar closed on Friday around about 129.60. And you can see this is a gap. So for those of you who've heard about gaps before, when the market's shut and some news comes out that is going to affect the market, like this Brexit chatter again, over the weekend. Clearly, if the market's closed, it can't react. So we have this reaction when the market opens, and it gapped. So in Asian trade, it opened around about 130.10. So we saw the market gap about 50 points higher from where it closed on Friday. Now, there is a feeling among some people that gaps always need to be filled. And I don't think that's the case. They don't religiously, not every gap has to be filled. But we did see a little bit of this overnight gap filled. The pound traded down to about, 129.80 this morning, 5 o'clock this morning. Did actually trade a bit lower, sort of 9:30, down as far as 129.70. And now we're just sort of chopping around just below the 130 mark. So that was the gap caused by this weekend news. Let's just flip this out to an hourly chart. Clearly, we'd had this big downtrend during the second half of October for the pound that looked something like this. The 127 area was interesting because it was the lows from August, 126.50, near enough. We saw a sharp turnaround, again, Brexit news driven last week. The market moved 300 points last week in fairly short order, and now we're just holding after this gap on Sunday night. So let's see what happens, but it does look like the pound at least is in recovery mode. So I think after that downtrend's broken, any weakness starts to look like a buying opportunity, and levels to watch. I think the Friday lows, 129.50, about 40 points below where we are now. And a bit further out than that, 128.50. You can see this sell-off. This is an hourly candle we're looking at, this sharp sell-off, 128.50, and the market rallied. So I think, like stock markets, maybe the bias is still up for the pound this week. Let's just put this in a bigger picture. There's our daily chart. So we can see the rally off those lows in August up to 133, sells off, gets pretty close to the lows again, and bounces. Okay, so there's definitely scope for more of a sell-off from where we are now, but the big level to watch is 126.50 to 127.00, the lows from August and the lows from last week. But maybe we'll see a bit more firming up for the pound as this week goes on. Let's take a look at the euro. 113 was the big level for the euro. So this was the lows in the summer. So euro US dollar traded as low as 113 pretty much in the summer. Rallies up to 118. This 118 to 118.50 area continues to be a massive barrier for euro US dollar. You know, it was something of a ceiling in June. The market sold off, came back up to it in September, sells off again, and we're now down on the support. So again, if we're going to bounce from anywhere, we saw a little bit of a bounce last week, but 113 is the big level to watch for the euro. So arguably, you know, the trading opportunity here, any weakness back to 113 and the buyers come back in, you know, we'd be expecting something of a recovery. The flip side, of course, if 113 breaks, it is a major level. It's the lows from July, late June, early July 2017. It's the lows from this summer. So it's, 16-month lows, euro dollar at 130. If that breaks, you'd expect there to be quite a few stop losses below that level and for it to come under some selling pressure. But for now, 113 continues to hold. Let's see what this week brings and update things on Wednesday and see if it's continued to hold again. We did go a little bit, but poked into oversold end of October when it went back down to 113 to have a look at that level. So at the moment, everything is suggesting we should see some strength from here. Just in the last week, we've not had that convincing a recovery. So I think big level to watch this week for euro dollar, that 113 mark. Let's take a look at gold. I mean, the story on gold, there's the arrow. Let's delete that and look forward to it coming back again on Wednesday. The story on gold over the last couple of weeks has been one of this trend reversing. So we had the big trend from April when gold was about $1,360 an ounce, dropped as low as $1,160. So pretty much a 15% decline in 4 months in the price of gold. You know, and driving that, a big factor behind that clearly was US dollar strength. When the dollar's strong, the price of gold goes down traditionally, and we have seen it's something of a turnaround. You know, we've seen it break out of this downtrend middle of October. Stock market volatility definitely helping there. You know, when markets go crazy like we saw in October, gold is traditionally viewed as a safe haven. So I think for me, the story on gold now, you know, is this recovery. There's our recovery. So sort of finger in the air next 6 months, you know, you'd expect it to start to claw back some of these losses it's made since April, assuming these levels hold. And I think for me, 1180 to 1200, I think this is the key support for gold. A bit of a wobble last week down towards 1212, bounced back again about $20. But for me, any weakness towards 1200 still looks like a buying opportunity for the price of gold. So looking really for this recovery to build up a bit more steam. And the final market, which is again is another interesting one, is oil. Let's just take a look at this. We've got the oil price here. Let's just wind it back again to like June of last year. That's when this strength started, in June of this year. It really doesn't like drawing uptrends, my charts today. I don't know what the problem is. Never mind. So we started from these June lows around about $42 a barrel, traded as high, you can see, as 77 in October. So we hit pretty much 4-year highs in October for the price of oil. And then, as is always the case, whenever we see a market move like this, there was lots of press or lots of market commentary in October. Are we going to see $100 a barrel in oil? You know, and the market has done completely the opposite. We've seen this massive decline. We're back to pretty much 6-month, nearly 7-month low for the price of oil. And I think it is something bounce or bust territory here. You can see this whole sort of 62 to 64 zone had been good support. It's really oversold, which you'd expect after the sort of decline that we've seen. So maybe this week we'll see something of a recovery for oil. I suppose you could say the aggressive trade is to be a buyer at wherever it is now, 63.24, with stop losses somewhere the other side of $62 a barrel, you know, because this level had held on the way up. But I think if we start to slip much below last week's lows, so much below, let's say, $62.50, I think we have to start looking at this as a major reversal for the trend in oil and start coming up with much more aggressive targets, I think, on the downside. If we put our trend in, it's looking something like that. So even if you wanted to be a buyer, there's an argument for sitting on your hands, because this trend that's been in place since early October is still going. It's coming in at the moment. Where is that? Around about $66. So I think, personally, I don't think we'll see it above $66 by the time we do this again on Wednesday. Famous last words. But it's whether or not it can continue to hold, I think, above last week's lows. You know, I think if we saw it slip below last week's lows, the risk is that there'll be even more people throwing in the towel. So I think it's a really interesting market to watch. There's our hourly chart on oil, and there's the decline. You know, you can see it's been a pretty steady decline over the last month. We have a couple of days where it rallies only to break below previous lows, sideways, breaks the lows, sideways, breaks the lows. So the next lows to watch, 62.50. And I think if we see it go below 62.50 again, because it's such an obvious low from last week, you'd expect lots of stop losses down below that level. So I think oil is another really interesting one to watch. So for me, stock markets is maybe the most immediate after the sell-offs that we had on Friday. Do we see more of a recovery over the next few days? Personally, for me, I'd be leaning towards yes, because these old lows from Thursday and Wednesday held. Pound against the dollar is another interesting one because of the gap that we had on Sunday night in Asian trade following that Brexit news. Let's see what happens. And after me saying gaps don't have to be filled, we have pretty much filled that gap now from Sunday night. So it's gone back and filled that 50-point gap. So the next big level to watch, Friday lows at 129.50, and oil to see if it continues to hold above last week's lows of around about $62.50 a barrel. So plenty to watch. The US elections tomorrow, maybe that means a quiet day for markets tomorrow, but we'll come back. We'll do this all again on Wednesday of this week. So if you want to follow along on your own trading platform, if you open an account with us, a demo account or a real account, you get access to all the markets I've been looking at today. Any questions, leave them on the YouTube video or drop me an email, david.jones@capital.com, and we'll come back Wednesday lunchtime and do this all again.